it. All right. It seems that I am live. Yes. Okay. So, welcome to my good morning and welcome to my first video produced content for 2 years. I got really busy and didn't really have time. I've had time to produce video now for some time, but then it's a matter of getting back in the old habit. Today I want to talk about trading the Bitcoin halving cycle, price cycle, because there is a clear pattern of the price revolving around the halving event that takes place in Bitcoin. The halving event is when the mining reward that the miners get on average approximately every 10 minutes, when that is cut in half. Initially, when Bitcoin was launched in January 2009, every 10 minutes a miner would get 50 Bitcoin. That was then later cut to 25 Bitcoins after approximately 4 years. And again, after another 4 years almost, it was cut from 25 to 12.5 Bitcoin. And recently, back the 11th of May, US time, 2020, this year, the halving reward was cut from 12.5 to 6.25. So this is basically the fresh supply of Bitcoin. This every 10 minutes on average, a new mining reward is set into circulation. And it's the fact that there is this constant reduction in the reward that means that Bitcoin eventually will end up 120 years from now with no further mining rewards, and we have reached the cap of 21 million Bitcoin, which is the maximum that will ever be available. This event where supply is cut in half, it's some of the first economic theory you learn when you start studying economics. I have a background, 5 years studying economics in university. When supply goes down of something, then the price goes up. Price is always a result of supply and demand. And what happens historically, if we look back, the first halving event, a price uptrend started that later you could say became a bull run, and then came a very sharp FOMO peak blow off top, as I call it, where the price increased very fast. And it took about 12 months from that first halving to the bull run FOMO blow off top, where Bitcoin increased all the way up to $1,100 back in 2013. And then the next halving was in 2016. So after the first major top in 2013 at $1,100, when the price goes up so steep, it then also afterwards come down very fast as well. And it dropped down all the way below $200, I believe it was. And that was about a year later. Then the next halving, which was in the summer of 2016, the uptrend from that bottom of the price started 12 months before. So 12 months before the summer halving of 2016, the price had bottomed out from the bear market that followed the bull market. And we saw price slowly but steadily starting to move up, always with corrections. We can expect many 30% corrections, or at least there was last time. 30% corrections between the halving and the $20,000 top in December 2017. So the price swings. It starts as an uptrend and then becomes steeper. I would call it a bull run. And then eventually, in the end, the last 2 months, the price increases very significantly. If we look at the, if we look at the steepness of the curve, which I find to be quite important for understanding when the next top will come, then the last 14 days of the bull run that ended 2017, the last 14 days, the price increased 100% in Bitcoin. If you double that time, and you're looking at approximately 4 weeks, 30 days, then the price went up 200%. Again, if you double that time and you go back approximately 2 months, it was 66 days, I believe it was, the price had gone up 300% those last 66 days. So it gets steeper and steeper, basically. And it's really this, all of a sudden, half of the supply missing in the market that is creating this upward price trend. So the 2017 bull run top, that uptrend started, as I mentioned, 12 months before this 2016 halving. The uptrend before the halving we just had in May this year started in January 2019. So instead of lasting 12 months before the halving, the uptrend started already 18 months before the halving. If we go back and look at the period of the halving cycles, or how long time it takes, then the bull run after the 2013 halving, it took 12 months. And then the last halving, well, from 2016, then it took 18 months to reach the top. At the halving, the price was around $600. It had its price swings, and it ended up on $20,000. And remember, it came from a low of only $200 in 2015, I believe it was. So it went from $200 to $20,000, which is 100x on your investment. Not that I think that it's going to be as, another 100x on the last bottom, which was $3,100, which was in December 2018. But it's not totally unrealistic that it could happen. So this bull run that we're having now, I expect it will take longer than 1.5 years. There's a lot of talk about it taking 1.5 years, because the last one took 1.5 years. And to be honest, that was my thought as well for a long time, until I kept thinking about the previous bull run after the halving was 1 year. Now it's 1.5 years. What's the difference? Why has it changed? And at the same time, I was pondering why we had those many bull runs in the first period before the first halving, where there was no halving cutting the mining reward in half. Why did we have so many bull runs back then? In my opinion, it is because what makes the halving interesting is the fact that the inflation rate is cut in half. But the inflation rate was also, as a percentage, cut in half many times during the first 4 years of Bitcoin. So, and by the way, so in the notes here on YouTube, I have a link to the website planbtc.com, where there's a lot of really valuable work, I believe, made by a Dutch quant mathematician who calls himself Plan B. And he's developed a model that talks about how the stock to flow has a statistically significant relationship with the price of Bitcoin. A lot of people have are skeptical about it, but the math is there. It's statistical significant, not just that they both have gone up, but the price of Bitcoin swings every 12 months exactly around the price that the model says it should be at, which makes it a co-integrated relationship, which suggests very strongly and with statistical significance that there is that relationship, because otherwise it wouldn't swing around the suggested price, the actual price. That work that he's done suggests that that the price in this bull run could reach $288,000 plus minus. Maybe it doesn't reach there, maybe it goes above, but that's based on historical data. It's $288,000 that according to the model could be realistic, and currently we are at $11,700. So there's quite a bit to go. So the reason we had these many bull runs, as I spoke about early in the first period, was that, so the inverse relationship of the inflation rate, you can call it, or is called stock to flow. So it's basically 100 divided with the inflation rate. So stock to flow is how much circulation do we have above ground compared to 1 year's production. So if you have 100 ton of gold above ground, but you produce 2 ton of gold every year, then the stock to flow is 50, because it's existing stock divided by the flow, and that gives the stock to flow. So the stock to flow model shows that when this stock to flow number goes up, and it's done the same, by the way, for gold and for silver, there is that strong relationship between the stock to flow, which again is the 100 divided by the inflation rate, and then the price, the market cap of that commodity. And because Bitcoin came off with a above ground supply of 0 in early January 2009, then initially the inflation rate was extremely high, because going from 0 to 50 Bitcoin after 10 minutes, that's an infinity inflation rate, because you're coming off 0. And then that inflation rate kept coming down, which meant that the stock to flow kept going up, basically from 0 to 8 at the end of the first halving. And because what we in practice had in that first halving, or in that first period, was several times the stock to flow being doubled, just like it is on the halving events. In my opinion, that's the reason why there was so many bull runs that were being pushed by this increase in the stock to flow. Now, inflation rate isn't falling as fast as it did in those first 4 years, but it's still being cut in half every 4 years at the halving. And that is today the main and important event in Bitcoin stock to flow. That's really the halving event, where in that beginning 4 years, it wasn't the driving factor of stock to flow. If you look at the stock to flow at the different halving periods, then coming off 0 in 2009. Stock to flow was 0. It was 8 by the end or at the time of the first halving. Then from the first halving, when it was 8 until the second halving, where the stock to flow in 2016 became 24. So the stock to flow went up 3 times. And the last halving we had now in 2020, the stock to flow has gone up from 24 to 56, which is a factor of 2.33. So the point I want to get to is why were there more bull runs early on? Why were they steeper? In my opinion, that's because the stock to flow was accelerating faster. And it's also the reason I believe that after the first halving, the bull run took only 1 year because the stock to flow was accelerating faster. And now, and then the inflation rate reduction, which is the same as stock to flow going up, was dropping slower, still fast. It's being cut in half every 4 years. It's phenomenal. It's going to be deflationary money. But between that 2016 and 2020 halving, the stock to flow now accelerated slower than it did before. It was only a factor 2.33 until this halving. And for that reason, I think that this bull run will not only take 18 months from the halving, it will likely take longer time. That's why I expect Q1 2022 to be a realistic bull run top. That being said, of course, none of what I say here is financial advice. It's just my personal opinion. You got to do your own research and you're responsible for your own investments. Also, I just want to say, I don't trade the halving cycle with any, like, what I want to say is, most Bitcoiners like me believe that Bitcoin has such a big value growth potential that you don't need to trade it to get a good return. Most of us believe you should take more than 90%, lock it away for 5-10 years, don't touch it, and you will be fine. So I'm just trading the halving cycle with a small percentage of my Bitcoin, and I'm doing that on eToro. I use these videos also to give information to the people that follow me there on eToro and also copy my trades. And so what I'm doing right now is with the funds that I have on eToro in US, I'm 100% exposed to Bitcoin at this stage of the halving price cycle. I don't want to sell any meaningful amount, at least until 100,000, and to be honest, preferably not before 200,000. And I also believe $250,000 per Bitcoin in Q1 2022, approximately 1.5 years from now. I think that's realistic. So I want to hang on to this bull run and not profit until we get closer to that. What's important to say is that there is a real risk, which is a positive thing, but there is a real chance that this bull run, because of all the money printing going on, could be the final bull run where Bitcoin doesn't have another bear market, where all the money printing, the stimulus, the UBI, the free money being sent out, the forgivable loans, that the currency is being so diluted that we'll see that the price of Bitcoin just will continue. It's a matter of reaching that point of escape velocity of Bitcoin's price. I still believe that it's too early this time around. I believe it will happen after the 2024 halving, in that 2025, 26 bull run. And the reason I believe it will happen there is because by that time, um, I believe that Bitcoin will make up such a large part of the global monetary value. It will reach 30-40% of global monetary value, and therefore by far be the largest and most dominating money, which then will have sucked value out of fiat currency, which will make fiat currency like dollars, euro, etc., worth less to such an extent that I believe for the first time we will see the inflation not only happening in assets, like I believe it is now. We're seeing stocks going up, we're seeing real estate going up, despite people having lost jobs, economy is doing bad, but assets are going up because money is being printed. Nobody want to hold money because people know it's being diluted in value. So you buy something with that money to make sure that your value is not being diluted by money printing. So people buy stocks, they buy real estate, and they also buy Bitcoin. But that 2024 halving, that if we say Bitcoin have a normal bull run, which by that time I see Bitcoin price going to like $2-3 million, that will make Bitcoin so valuable that the reduction in value of fiat currency, we will see that not only in assets having being inflated in prices, but also start to see that the inflation happens in normal consumer goods, supermarket spending, etc., because people don't want to hold dollars or euro or other currencies anymore. I think it will be such a big media event and momentum that when people around the world will talk about Bitcoin now is taking up so much of the total monetary value in the world and actually dominating all other currencies by far. And I think that will be what will make people run to the exit door of fiat and want to get into Bitcoin before the neighbor does, because if you wait till the very end, then you can't get any Bitcoin for your dollars. Nobody wants them. But if you're not the last person, you can still buy some Bitcoin very expensive. So I think it's really game theory. And we saw recently that MicroStrategy, a listed company on the stock exchange here in US, they converted 250 million dollars that they had in cash on their balance sheet. They converted that to Bitcoin. They pretty much took their entire cash balance and converted it to Bitcoin, because they said, we feel it's our fiduciary duty not to have the value. We're a listed company. We're not doing our due diligence and live up to our responsibility if we just have it in US dollars, because the amount of money that's being printed, it's just going to be diluted. So to safeguard their shareholders' cash in the company, they said we're going to buy Bitcoin instead, because that way we are hedging against this money printing. So now we're starting to see companies and people, investments, institutions, whatever, not only buying Bitcoin because they see it as a potential good investment, but people are starting to get Bitcoin because it's just the alternative, which is staying in fiat currency, is starting to look really, really bad. So if there is a lot of that is what could make this bull run just keep going in eternity. And essentially Bitcoin goes to infinity in price, valued in fiat currency. But I mean, I'll have a better idea of that when we proceed in this bull run, which is still in an uptrend. It's going to become more of a steeper bull run, and then in the end, it'll get really, really steep. And I'm gonna have to, look at the news and see what's going on, and see, how many of my family and friends are interested in Bitcoin. If I still see a lot of conservative people saying Bitcoin never, then I think I'll believe that that there's still some way to go. But it'll be very interesting to follow. But the main reason I don't think that this will be the bull run that goes into to infinity, basically, is the money printing that we have now. Yes, it accelerates the bull run. It will make a higher Bitcoin price highly likely. But if that means that we get a steeper curve faster, then we also faster put significant Bitcoin holders in a situation where they say, I want to take some profit now. I want to pay off my mortgage. I want to buy a car. I want to go on a holiday, or whatever it may be. And when some of those old school whales, Bitcoin whales, start to take significant profit, then all of a sudden you have more supply than demand. And if the price starts going the opposite direction downwards, then if that happens before Bitcoin becomes a dominating global currency, I think that then we will have that major correction in a bear market, and it's probably going to last a year. I don't know, maybe shorter, but it's historically what happens after a FOMO top, and it blows up and then it crashes. Bitcoin loses a lot of value. It loses, it's lost historically 85 to 95% of its value. Last time it went in December 2017, it touched $20,000. 1 year later, it was at $3,100. So it dropped 85%. Maybe it'll be a little bit less next time, and maybe it won't be at all. We'll see. But right now, I feel confident trading this halving cycle with small percentage of what I have. Most I like to just keep locked away on another continent, far away. I can't touch it. This little bit, I feel very comfortable that, even if there's 30% corrections now or tomorrow, 40%, I feel I know where we're going. Of course, it's no guarantee, but personally, I feel, look, we're in a bull run. This is going to go up. Supply is missing. And I see, I definitely see, 100,000. I expect really as a minimum, but I also expect us to go above $200,000. And the 288,000 that Plan B mentions, I think absolutely is on the table as a possibility. And again, on YouTube, you can find the link to his website, but it's basically planbtc.com. I recommend listening to some podcasts there, reading his Medium articles. They explain it very well. But yes, so an update on my strategy right now, the small amount that I trade with, I am fully exposed to Bitcoin. I'm planning to stay fully exposed probably until Q1 2022, 1.5 years from now. And then it was really impossible for people in the last bull run to sell exactly at 20,000 and exactly buy at 3,100, because nobody knew exactly where was the top going to be and where was the bottom going to be. But I will be looking at the steepness of the curve and where we are in the price range, according to what's the normal historic factor that Bitcoin increases with. I also definitely will be looking at the Plan B, the numbers in his model, when I decide to start taking some profit. And since the part that I have on eToro is all dedicated to trading this halving cycle, I will be taking all of that, selling all of that, and taking profit on all of it. The ideal scenario, but again, timing, it's impossible to get 100% right. But if I could do something similar to in the last bull run, saying, okay, 15,000 is high, I'm going to sell. And then it dropped and it went up to 20 and then it went down to 3,100. But if you could sell at 15 and then buy at 5, not exactly at the top, not exactly at the bottom, but that would then have tripled your holding if you're able to do that. That's what I am aiming to do in this with this trading strategy. So hopefully it'll be something like selling Bitcoin for $240,000 a piece and buying it back at $80,000 a year later. We'll see about that, but yes, it went on a lot longer than I had planned. I'm also using this new software live Restream, and yeah, feel free to ask me questions in the comments. Also, you can follow me on eToro there. I post some longer articles there, and then on Twitter is as you can see there, it's of course shorter because Twitter is like a mini blog, and maybe a little bit more raw in my unfiltered opinions. Where on eToro, which is a nice trading environment, I'm being a little bit more mellowed down. But thank you very much for watching. I hope you got some value out of it. Let me know in the comments if there's something you want to hear more about, or if you have any questions. This is my passion. Bitcoin is my passion. I love Bitcoin, and I love talking Bitcoin. So if anyone's up for that, please reach out. All right, you guys have a great